Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi in London, and these are the stories that set your agenda. Gold hits another record, set for its best annual gain since 1979, as Vice President J.D. Vance says the U.S. government is heading for a shutdown. Donald Trump adds new tariffs on lumber and wood products. The U.S. President and Israel's Benjamin Netanyahu agree a 20-point proposal to end the war in Gaza, but Hamas are yet to respond to the plans. Plus, UK Prime Minister Keir Starmer looks to turn around dismal poll ratings as he addresses the Labour Party's annual conference. We'll preview the speech. Well, good morning again, everybody. If you're just tuning in, so much to get through today. Middle East geopolitics, a big focus. But, of course, the other big story is we are heading closer and closer to a potential U.S. shutdown. And on the back of that, we are seeing actually minimal market reaction today. You've got most of these futures leaning towards the red, but only marginally so, moderately weaker. Take a look at S&P futures, just down about 8 basis points. Similar theme for the NASDAQ as well. This with the Trump administration announcing a new round of tariffs, this time on wood, on lumber, on timber. So the tariff, we're not completely out of the tariff woods, so to speak, not just a pun this morning. European markets also looking to open down in the red, down about 14 basis points. And then the FTSE 100 also leaning towards the red as we get to an important day at the Labour Party conference with the UK Prime Minister Keir Starmer delivering a speech widely watched. And we'll see whether it gives any clues as to how they're thinking also about the upcoming budget. As for cross-asset, take a look at gold. It has been the instrument of choice for investors in the run-up to this U.S. shutdown, up 0.9% today, another all-time record high. This time yesterday, we were trading $100 lower. So this has all happened just in the last 24 hours. Money keeps pouring into the safe haven. USD slipping a little bit today, down 4 basis points. So again, uncertainty about U.S. politics, more regional geopolitics weighing on the USD. 10-year not doing a whole lot this morning, 4.14. But of course, one focus for investors this week is whether the shutdown will have an impact on the data releases that are yet to come, on things like NFP and JOLT. And if that does happen, that it could influence pricing for monetary policy. So keep an eye on that angle. And then Brent, we are down 0.6% today, just shy of $68. And this in anticipation of another potential production increase out of OPEC+. So those are your cross assets this morning. But let's take a look at how some of these Asia markets are faring with Bloomberg's Asia Equities reporter, Winnie Su. What are you watching out for today, Winnie?
Yeah, good morning, Jemana. Also not doing a lot here in Asia today, but I thought we'd just take things into perspectives as we're wrapping up with the month. We are seeing that monthly gains of MSCI Asia about 4%, and that's already outperforming that of S&P 500. Euro stocks really on the back of that AI optimism in China and also cheap valuations in the region. Now, also to mention, in Japan, we saw that weakest demand when it comes to the 2-year bond auction, and that's mainly because if investors are expecting the Bank of Japan to raise rates earlier than later, especially after a board member yesterday said that the need to raise rates are actually increasing at this moment. Now, take a look at what's going on in China today. Actually, also a mixed picture that we're seeing, especially ahead of that big, long holiday starting tomorrow. So we are seeing Chinese stocks actually logging 5 months of gains. That's the longest of such streaks since 2018. So overall sentiment is still upbeat, especially after today's PMI numbers also showed a bit of an improvement when it comes to factory activity. And today's highlight in terms of sectors is definitely the metal sector. So we talked about how gold prices are rising because of the concerns around a potential U.S. government shutdown. And that has really supported the overall metal sector across Asia. But one stock to highlight here is Zijin Gold. Really a good day for it, not just the favorable macro environment, but also on its trading day today, jumping some 60% today after it raised already $32 billion USD as the biggest IPO in the world since May.
Bloomberg's Asia Equities reporter Winnie Su, thank you so much for the latest. Now more on that shutdown story. Vice President J.D. Vance says the U.S. government is on track to shut down after a meeting with congressional leaders, blaming Democrats just a day before federal funding is set to expire.
Whatever our disagreements are, let's negotiate with them. Let's talk about them. Let's figure out a bipartisan solution, but you don't shut the government down. In other words, you don't put a gun to the American people's head and say, unless you do exactly what the Senate and House Democrats want you to do, we're going to shut down your government. That's exactly what they're proposing out there.
We've had 45 days and 45 days and 45 days and 45 days. We asked to meet earlier. They didn't want to. So we think when they say later, they mean never. We have to do it now. First, because of the timing issue, and second, because now is the time we can get it done.
Okay, now let's get more with Bloomberg senior editor Farage Pants. Well, we just heard J.D. Vance there blaming Democrats. What exactly is holding up the talks for funding the government right now? Where are the obstacles?
Well, as we heard, both sides are very busy trying to frame the story in a way that allows them to blame the other side, which suggests that they're not particularly close to resolving this impasse. And with less than 23 hours to go now until the deadline to keep the U.S. government funded, it seems like this meeting in the White House very much failed to break that deadlock. The biggest issue is funding for health care programs, funding for Obamacare, which the Democrats want to keep, and the Republicans are now saying, well, you know, we can talk about that, but let's keep the government funded, let's keep the government open while we do the talking. That's not something that the Democrats are willing to do, but the Republicans do need at least 8 Democratic votes in the Senate to get any resolution passed, and it doesn't look like they're getting anywhere close to it. For investors, the biggest focus has become whether this shutdown might delay the release of jobs data this Friday, and it looks like it would. So they have really focused in on that, whether the Fed can continue cutting rates without getting that crucial piece of information, and that's why we have seen that stampede toward gold investment today.
Yeah, absolutely. Stampede is one way to call it. I was quite pleased with myself, my pun at the top of the show, saying we're not out of the woods yet on tariffs, namely because the Trump administration has actually are looking to impose tariffs on lumber and timber. What do we know about these new round of tariffs from the Trump administration?
Yeah, it's a right forest of tariffs there, isn't it, Jumana? I mean, this is one of the latest iterations of the sectoral tariffs that the Trump administration has introduced very recently. We saw the same thing in the pharma industry. And this follows an investigation by the U.S. government into the market conditions, which means that this is a sectoral tariff, and the method they use means that it is not subject to the lawsuit that covers the country-by-country tariffs that go into the Supreme Court. So what we see here is tariffs on lumber, on timber, on wood products, furniture, vanities, and kitchen furniture, etc. The country that is facing the biggest impact from this is Canada, which accounts for a large majority of the timber sales into the U.S. So this is yet another way the Trump government is trying to influence economic conditions through tariffs, and they say they're looking to protect domestic production, especially in countries like North Carolina, which have a large production base in the furniture industry.
Bloomberg's Farage Pants, thank you for running us through it, everything on shutdown, but also on those tariffs as well. Let's take a closer look now at the potential impact of a government shutdown on markets with Bloomberg's Valerie Teitel. Val, earlier, Balazs and I were talking about the stampede of money that's going into gold. Talk us through the price action.
Yeah, it's definitely not ending. It doesn't feel like it's ending anytime soon. Gold up near another % so far this morning. It's had, Jumana, it's headed for its best month in 14 years, up 12% for the month of September alone, up nearly 50% on the year. So this rally in gold has really been a long time coming. It's hard to tie it maybe necessarily directly to the shutdown risk, because this has been something that's been happening in the markets for quite a substantial amount of time, but definitely adding to the nerves for the yellow asset. We also want to keep our eye on the Treasury market. The last time around, the government shutdown that lasted over a month did cause a 50 basis point rally in the 10-year sector. Maybe we got some hints of that yesterday. There was a substantial rally across global fixed income. Treasuries also felt the brunt of that, down around 3 basis points in the 10-year sector. But remember, Jumana, today is month end. It is also quarter end. That is normally a very positive backdrop for global fixed income. We normally see a decent yield flattening into these risk events. So hard to disentangle what exactly was the catalyst, but we are seeing yields lower across the globe. Another potential catalyst, watch out for what's happening with oil. Remember, oil is a good barometer for where people think that the U.S. economy is headed. We did have Brent crude have its worst session yesterday in basically 2 months. So a lot of that had to do with, yes, we had OPEC plus reports about more production. We also had what's going on in the Middle East with Netanyahu meeting with Trump in the White House. But again, if you're more concerned about the U.S. economy growing at the pace it did in the second quarter because of the government shutdown, oil is a good hedge on the downside.
Val, thank you as ever for running us through some of those key financial indicators today. Valerie Teitel. Now, turning to Middle East geopolitics, President Trump and Israeli Prime Minister Benjamin Netanyahu have agreed to a 20-point plan designed to end the war in Gaza. But it is unclear if Hamas will accept the proposal, which calls for the group to disarm, relinquish control of Gaza, and release all hostages.
I also want to thank Prime Minister Netanyahu for agreeing to the plan. If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
I believe that today we're taking a critical step towards both ending the war in Gaza and setting the stage for dramatically advancing peace in the Middle East.
For the latest, let's bring in Bloomberg's Dan Williams. So a real watershed moment potentially for the region yesterday. Dan, Hamas has 72 hours to respond to this proposal. Let me start off by asking you, what exactly is in that 20-point plan? Run us through it.
20-point plan, it's basically a more articulated, more detailed version of the Israeli offer, the long-standing Israeli offer for a Hamas capitulation, which would put an end to the war, which would allow Israel to achieve its war aims, and which potentially, as Netanyahu himself stated at the White House, open up the doorway for engagement with potential Arab peace partners in the future. Keep in mind that this war has really polarized opinion in the Middle East and elsewhere in the world. Israel has found itself profoundly isolated diplomatically, and the war has dragged on, I think, longer than anyone expected. Next week, it will be at the 2-year mark. So what Hamas is actually being asked now is to bring the war to a close in a manner that would allow those surviving Hamas members to go into exile or to be absorbed into the general Palestinian community. Institutionally, Hamas would cease to exist, but there is an opportunity here to get out of it alive for those Hamas members who go along with it. It's also different in that there are now a number of public stakeholders in the region, including Qatar, Turkey, Egypt, who have signed on to this plan, apparently. So Hamas will be feeling increasingly isolated, not just militarily in Gaza, but also regionally, where there is at least an implicit indication that its former backers, its former hosts, perhaps countries that might have wanted it to win or persevere in this war, now wanted to call it a day.
Now, you talk about the role of Arab states, particularly Qatar. Dan, I want to also ask you about this phone call that took place between the Israeli Prime Minister and the Qatari Prime Minister, where the Israeli Prime Minister, quote unquote, expressed regret about the attacks on Doha. The Qatari side are framing it as an apology. What role do you think this played in helping to get this peace proposal across the line? How significant was it that this call actually took place?
I think it's very significant. Hamas is obviously an involved party here. Israel is obviously an involved party. Qatar isn't far behind. This is a country that has hosted the top Hamas delegation for years now. It's been serving as a mediator. It's also caused quite a bit of rancor in Israel and among Israel's supporters of the United States for its ties to Hamas, questions raised as to whether it's a neutral mediator or effectively a backer of Hamas, which has open channels to the West, given its importance to the West, its status as a US non-NATO ally. However, Israel really put things on edge regionally, certainly in Qatar and in Washington, by carrying out an unprecedented airstrike on September 9th in Doha, the Qatari capital. That was intended to kill the leadership of Hamas there, presumably to expedite through firepower an Israeli victory in the Gaza war. Apparently that failed to succeed. However, one of those who were killed in the strike was a Qatari officer. So there was definitely a physical loss, a loss of life, including a loss of prestige for the Qataris in terms of the blow to the sovereignty. It's hard to see how the Qataris would have signed on to this stage of the mediation, what Trump is casting as an end to the war, without at least having the face-saving gesture of this overture by the Israeli Prime Minister made publicly.
Dan, thank you so much for the reporting. Dan Williams.
Thank you.
Now, coming up, Keir Starmer gives his annual party conference speech later today as the UK Prime Minister looks to revive his premiership. We're live in Liverpool next. This is Bloomberg.
There are still people who peddle the idea that we could just abandon economic responsibility, cast off any constraints on spending. They are wrong. Dangerously so. When spending gets out of control, when market confidence is lost, that doesn't just show up in some OBR report and some difficult headlines a few months later. It is felt immediately in the growing cost of essentials and rising interest rates.
UK Chancellor Rachel Reeves speaking at the Labour conference in Liverpool. Well, after the Chancellor's address, the conference concludes today with the main event, a speech by the Prime Minister, Keir Starmer. Less than 15 months after winning a landslide election victory, Starmer's party is languishing in the polls behind Nigel Farage's populist Reform UK. Bloomberg's UK correspondent Lizzie Burden is in Liverpool, still in Liverpool for us. And Lizzie, obviously you did conduct an interview with the Chancellor yesterday, but looking ahead to today, there is a lot of pressure on the Prime Minister, both from within his party, but also externally with the rise of Nigel Farage.
Absolutely, Jemana. It's been described as make or break for Keir Starmer, this, and the message that we already heard from the Chancellor yesterday and that I expect to be hearing from the Prime Minister again today is that the single biggest threat to working Britons comes from Nigel Farage and Reform UK, and that the left needs to unite if they are to fight the populist right. They're fighting for the soul of Britain, in Starmer's words, that we've heard already. They're looking to reclaim patriotism here in Britain, and there are Union Jack flags all over the conference hall in Liverpool and outside it, carried by protesters, I might add. But the danger for Starmer is that by focusing on the right, he alienates the left. And already there's signs that there could be incredulity among the left, that you've got Tony Blair, the former UK Prime Minister, Labour, of course, being brought back into the fold for this Gaza peace plan that you were discussing with Dan Williams there. But as you mentioned, there's also the threat from within the Labour Party. The Mayor of Manchester, Andy Burnham, has been a hot ticket on the conference agenda here. A YouGov poll showing that actually most Labour members would prefer him to run Labour than Keir Starmer. Burnham dampening some of that speculation yesterday, saying that he's pretty happy in his current job. So maybe it is that Starmer has tightened his grip on the party over the past couple of days. But as I've said to you, Jemana, the mood here is pretty flat.
And of course, we're keeping a close eye on the fiscal situation with that £30 billion odd pound fiscal hole that the Chancellor needs to fill. You spoke to her yesterday, Lizzie. Did you learn anything about what could potentially be in this, what's going to be very crucial November budget?
Well, of course, she's backed herself into a fiscal corner because Labour's manifesto committed to not raise the three main levers of tax: income tax, VAT and the payroll tax. But even though she gave me the strongest commitment yet that she wouldn't do that, there is still room to wiggle within it. You could have, for example, a broadening of the scope of VAT. They could freeze the income tax threshold. So maybe that sort of creative thinking is how they're going to raise the 30 or so, as you say, billion pounds needed to meet the fiscal rules, as economists estimate is the amount. But what if she needs to spend even more? I asked her, are you going to lift the two-child cap on benefits? She said, I'd like to spend more on child poverty, but only when I can afford it. She went on in another interview to say that perhaps she'd be open to raising the gambling tax. And conveniently, the amount that would raise is about the same amount that it would cost to lift the two-child benefit cap. So I'm waiting in Starmer's speech later to see if this is going to be the policy rabbit out of the hat from the Prime Minister.
Yeah, certainly a lot of pressure on the Prime Minister later today to turn things around. Bloomberg's Lizzie Burden in Liverpool. Thanks for the coverage. Now, later in the show, shutdown, showdown. Vice President J.D. Vance says he believes the U.S. government is heading for a shutdown. We'll bring you the latest. This is Bloomberg. Cathie Wood has refused to comment on reports her ARK Invest is amongst potential investors in a major funding round that could value stablecoin issuer Tether as high as $500 billion. The firm's CEO and CIO spoke to Bloomberg's Cathie Griefeld.
You think about gold transitioning into crypto. For a lot of people, that's digital gold. When it comes to some of the investments that you're making, Bloomberg News has reported that you could be one of the backers behind Tether, for example, in a major funding round. Is that correct? Is ARK backing Tether?
We can have no comment on that. So that's what I'll say there. I will say you'll see that we have backed DATs and Circle. So we're very well exposed to this crypto cycle. We think stablecoins generally, and of course Tether and Circle have 90% of the stablecoin market now. We think that is a very important entree. The holders of stablecoin will have an entree into the DeFi ecosystem, so decentralized financial services that will now take place on public blockchains. So we think that's really the definition of the next generation internet. It's the layer of the internet that was not built early on, because in the late 80s, early 90s, no one expected financial services to take place on the internet. So finally, 30 years later, we're getting the layer of the internet that is going to enable it.
So, Cathie, you mentioned DATs. ARKW has a big holding of Tom Lee's Bitmine and Brera Holdings, which is now Soulmate. I want to get your take on what you think of DATs versus ETFs. Why would DATs be a better way or a preferred way of investing as opposed to just in the coins themselves?
Yes. Well, one of the reasons we did not choose to invest in one of the Ether ETFs is, at least as of now, they will not be allowed to stake. And we think staking for yield is a very important part of the Ethereum story. We were having a lot of trouble, therefore, getting access to Ether in our portfolio. So when Bitmine immersion came along, we thought that would be a great opportunity after it sold off significantly following the burst. We did take our position. And same with Soulmate. We have a lesser exposure to Solana, but we now have exposure to the big three: Bitcoin, Ether, and Solana. And we think all three are going to play an important role.
ARK Invest CEO and CIO Cathie Wood. And coming up, as a U.S. government shutdown looms, we get a view from RBC Wealth Management's Frédérique Carrier on what it could mean for markets. That's next. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Joanna Bersetchi in London, and these are the stories that set your agenda. Gold hits another record as Vice President J.D. Vance says the U.S. government is heading for a shutdown, and investors are not out of the woods on tariffs as Donald Trump slaps new levies on lumber products. The U.S. president and Israel's Benjamin Netanyahu agreed to a 20-point proposal to end the war in Gaza, but Hamas are yet to respond to the plans. Plus, UK Prime Minister Keir Starmer looks to turn around dismal poll ratings as he addresses the Labour Party's annual conference. We'll preview this speech. And into what could be a U.S. shutdown, especially as signaled by the Vice President J.D. Vance. So we are seeing equity markets, relatively muted, leaning towards the red today. S&P futures down about 9 basis points at similar amounts, well, flat basically for S&P futures. Not a lot for the Nasdaq. European markets leaning towards the red as well. Big day in the UK with the Prime Minister's speech coming up at the Labour Party conference. So we'll be keeping close tabs on that. But of course, major events, the upcoming shutdown, new tariffs announced by the Trump administration on lumber, on wood, and also on the movie industry as well. So not out of the woods, as we've been saying, on the tariff front. Switching over, we covered this earlier on in the show, but worth marking, money keeps going into that safe haven gold. Take a look at the price action today, up 0.9%, very close to $3,900, yet another record high. So money keeps going there. USD slipping a little bit in trading. Again, the uncertainty around the shutdown is having an impact on the USD. And obviously, that has been one of the big themes for this year as well, with the greenback down more than 10%. 10-year yields not doing a whole lot, though we're holding in at 4.14%. Some important labor data coming up this week with JOLTS, ADP, and NFP on Friday. And then Brent, you can see slipping a little bit, down 0.6%, as perhaps some of the geopolitical risks in the Middle East region potentially subsiding. And we talk about the potential for further production out of OPEC Plus this weekend. So all of that being factored into the price of oil. Now, as we spoke about, gold surging after President Trump failed to reach an agreement over spending with top Democratic congressional leaders, while Vice President Vance says he believes the government is on track to shut down. Let's get more with Bloomberg's senior editor, Balazs Pence. J.D. Vance blaming Democrats here. What exactly is going on? What are the main sticking points between the Democrats and the Republicans when it comes to passing this bipartisan bill?
Well, Joanna, we see J.D. Vance blaming the Democrats, and we see Democratic leaders blaming the administration Republicans. And that's a surefire sign that they are getting ready for a blame game here, getting ready for a potential government shutdown. We're less than 22 and a half hours away from that deadline to keep the U.S. government funded. And it looks like that very crucial meeting at the White House did not go very well. They failed to break the deadlock. The Democrats are looking for continued funding for some Obamacare programs, which is something that the Republicans are not ready to commit to just yet. They're proposing to keep talking while they keep the government funded. Chuck Schumer, the Senate leader of the Democrats, said that that's not something they're willing to go for right now. So the two sides are pretty far apart, and the voices that we heard from both sides suggest that we might indeed be headed for a shutdown. And one reason investors are focused on that is that that would mean a delay of the jobs data from the Bureau of Labor Statistics this Friday, which would be a crucial piece of information for the Fed to continue cutting interest rates in the U.S. And if that doesn't happen, that changes market conditions, and that's why we're seeing that stampede into gold today.
Yeah. Bloomberg's Balazs Pence, thank you so much. Well, joining us now to discuss more is Frédérique, the head of investment strategy for the British Isles and Asia at RBC Wealth Management. Good to have you in person, Frédérique. I'm used to speaking to you down the line. Let's talk about the significance of the shutdown. What sort of an impact do you think it's going to have on markets and investor appetite this week?
So we think that investors expected mostly the shutdown to be dealt with, to not happen. And so if it does, we expect markets to perhaps have a risk of session, and we do agree that the impact will be perhaps more on, rather than on the economy, on whether markets will get economic data. So in 2016, there was also a shutdown, 16 days. There was a delay of more than 2 months to get data, and so it could impact not only non-farm payrolls, but also possibly inflation numbers for which come out next week.
How are you thinking about the signals coming through from the U.S. economy? We have this important jobs figure on Friday, but so far, perhaps, the data would suggest a moderate slowdown and not necessarily that we're on track for a U.S. recession.
So we would agree with that. We would agree with a scenario where the economy grows, avoids a recession. But really, some of the GDP numbers we've had recently have really surprised on the upside. We think non-farm payrolls, if we do get the numbers, should come out just about consensus, about 51,000 jobs. And we think that they mask a structural shift. Most of the job growth has been driven by healthcare workers, and cyclical services hiring has been very weak. So while non-farm payrolls are still an important variable to look at, we think that one has to look at broader variables as well.
Yeah, how are you thinking about the investment thesis of U.S. equities versus rest of the world right now?
So we continue to like U.S. equities, and we have been saying to diversify away a little bit. Europe is a good place as far as we're concerned. There's still some volatility in France from the political angle. However, good news elsewhere in Italy with a lower fiscal deficit, in Spain with good GDP numbers, and of course the main driver will be the infrastructure program in Germany, and valuations there are moderate.
Yeah, let me ask you also about the UK. We've got an important Labour Party conference today, speech going to be delivered by the UK Prime Minister. What appetite do you think the investment community has right now to pile into UK equities? The valuation play is there.
The valuation play,
but not
is
necessarily
there.
The growth.
That's fair. The valuation play has been there for quite some time. It has to be said, but perhaps for investors who want, in particular, high dividend yield stocks, it is rich hunting ground. But overall, the economic prospects of the UK are somewhat limited and challenged.
I thought it was quite interesting this week that AstraZeneca decided to do its listing on the New York Stock Exchange as opposed to London. What does that tell you about companies' perception of liquidity and appetite in the UK right now?
I think companies are concerned about the discount that their stock has if they are listed here in the UK. Perhaps CEOs are also concerned about remuneration, which is less here than over there. So this is something which has been impacting. AstraZeneca is the latest company to voice this concern, but there's been others in the past, and that's one of the reasons why we are a bit more cautious about the UK. Really, some of the fundamentals are lacking there.
Do you think the IPO dynamic is integral to attracting more investors into the broader market?
We think it helps, definitely.
Yeah, it does help. When it comes to European equities, you said that you're still into the fiscal story, and yet that was a theme, I would say, a couple of months ago. Why do you think it still has legs for European equities?
Well, the Ministry of Finance in Germany has explained how it was going to disburse the money, and we know that it's going to be front-loaded. We know it's coming very soon, and we know that it's going to go to areas which are going to benefit from economic growth with a high multiplier effect, such as, for instance, 22 billion in the rail system, and that should improve efficiencies, should improve the ease of doing business in Germany. And so that will have a positive impact on the German economy, but also in a broader sense on the European economy.
What I find interesting, I've been chatting to a lot of people recently about the sort of growth in alternative assets and how much interest there's been in private credit in Europe. And I wonder whether the growth, the explosion of private credit is going to have a knock-on effect to some of the public markets as well. Do you see that translating?
We see a lot more interest in private credit, for sure, but we still think that there is a demand for stocks and other markets.
Yeah. Okay, Frédérique, thank you so much. Frédérique Carrier, Investment Strategy Head for the British Isles and Asia at RBC Wealth Management. Now to some of the other stories making news. The governor of the French central bank says the nation must overcome its political impasse to tackle its debt burden. François Villeroy-du-Gallo told French TV concerns over high government debt are weighing on corporate investment and hiring and pushing consumers to save rather than spend. Separately, a new opinion poll suggests far-right leaders Marine Le Pen or Jordan Bardella would easily win the first round of the presidential election if it were held this week. Giorgia Meloni's annual budget this week is set to reveal just how soon Italy can conform again to European Union rules in the crowning fiscal achievement of her premiership so far. The plan is set to show the country's deficit back below the bloc's 3% of output ceiling by next year at the latest. The finance minister has cautioned that the results depend on Italy's economic performance in the final quarter. And Jefferies Financial Group has posted its best fiscal third quarter revenue ever, with total revenue jumping almost 22% to over $2 billion. The company attributed the strong numbers to what it describes as a strengthening environment for deal-making and trading activity across the globe. Jefferies executives have also expressed optimism about the company's near and long-term outlook. And the CEO of PIMCO says the full impact of Trump's tariff policies has yet to be seen. Speaking to Bloomberg, Emmanuel Roman said the hit from levies may weigh on prospects for the U.S. stock market.
If you look outside of the hyperscaler, life in industrial America isn't great. I mean, top line is not growing, and one of the questions that we don't know is the impact of tariff and what will happen in corporate America in terms of how they're going to deal with either passing on prices or diminishing margin and so on and so forth, and we don't know that. And so there's a whole leg of the equation that we haven't really seen.
Stock investors have been trying to outbull each other this morning, and Max Kettner was on earlier of HSBC, and he was saying, look, he thinks that the Fed is making a policy error by cutting more significantly, but they're along for the ride because it's just going to inflate the prices of assets significantly. They want to gain from that. Do you agree with that assessment?
Well, I haven't listened to him, so I would not be
good initial punt. I mean, do you think? Yeah.
I don't know. We have a lot of trust in the Fed in terms of them doing the right thing, and I think that the Fed usually doesn't know much more than we all do. They look at the same data, and so the decision is a very well thought out decision where they will decide what to do with the condition that they are being given. And if, for example, we were to see a very bad inflation print, it would be very difficult for them to cut. Now, they may argue that they have to look through inflation and so on and so forth, but the Fed is a very rational actor in the market, and I don't think anything's going to change. And the same goes for the central bank in the UK and the ECB and so on and so forth. And I think once you're in a job, your behavior changes also in terms of how you think about what the right thing to do is.
Are you alluding to the new Fed chair next year?
No,
when you say that?
I'm just saying it's like being a Supreme Court justice. You know, it's a very important job, and I think people take their job very seriously.
There could be a big change next year. There's going to be a new Fed chair. Do you expect to see any daylight between a Fed chair appointed by this White House and Chairman Jay Powell and his current leadership?
You know, I was reflecting on this, and we were talking about this. I mean, every single Fed chair has been, to some degree, a political appointee. And, you know, there's been a history of very good Fed chair since the Burns and the Nixon presidency. And I see no reason why that would change.
The list of candidates we've seen so far, we've said it repeatedly, very credible names on that list from this White House and the Treasury.
Yeah. And it is important to remember that it's in everyone's incentive to have a very credible Fed chair, because the market will not like a non-credible Fed chair.
That was the CEO of PIMCO, Emmanuel Roman. And coming up, as Eastern Europe responds to Russia's incursions on its borders, Latvia says it's in a, quote, hybrid war. We'll bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Latvia say they are in a, quote, hybrid war as European officials believe that Russia is escalating a campaign against Europe. This comes as Russian drones have flown into Polish and Romanian airspace, with Danish authorities investigating the sighting last week of large drones near several airports. Joining me now is Bloomberg's Piotr Skolimowski. We're seeing with increased amount of frequency these incursions into NATO member airspace. Now, Latvia, you are in Latvia. How is the country responding to Russia's actions?
Indeed. So we're talking about hybrid warfare, which is something like a gray zone between the war and peace. And Latvia, as well as other Baltic states, as well as Poland, actually, has found itself in this situation for quite some time now, at least since 2021, when we first saw these attempts by groups of migrants from the Middle East suddenly showing up at the border and trying to cross. And that created a situation of a crisis on the border. And it was the first wake-up call for these countries to respond. And Latvia was sort of at the forefront, along with the rest of what's essentially a NATO eastern flank. So obviously the first response is always to rise defense spending, and these countries, including Latvia, have been in the forefront of spending. So in case of Latvia, we're probably going to see 5% of GDP spent on defense by the end of next year. We're already seeing this in Poland. Other countries are also going up to that level, which is extraordinary given that some of the countries in NATO are basically spending around 2 and going up to 3.5 over the next decade. But that's obviously not enough. The first measure or the first response has been to reinforce border because of those flows coming in. And we've seen those countries responding by building fences, by reinforcing the border, by building bunkers. But, the sense of the threat is always there, makes them, forces them to basically conduct drills to make sure that the population is aware that the threat of a warfare is constantly there, and it may come by stealth, essentially.
Yeah. And you talk about the role of the public sector, what governments are doing in terms of committing to further defense spending. But how is the private sector in some of these Baltic states responding?
Yeah, so normally, if you think about the private sector elsewhere, obviously there are certain resilience attempts or drills or tests for infrastructure companies, power companies, and so on. Here, it's more widespread. So you even have, as an example in the story, drugstore that goes through those attempts. But essentially, this is not just a drill in the case where you have an attack on infrastructure company like a power company, because that can be combined with misinformation, for example. So you have a situation where there's a disruption of service. At the same time, there's a misinformation campaign on the social media where you hear about this potentially being a disaster, and that drives population into panic. So those companies have been going through those tests for a very long time. We had one of the CEOs basically saying, in Western Europe, this might be new, but we are pretty much prepared. And the fact is that, looking at what's happening across Europe, across countries like Denmark, but probably also in UK, the sense of this hybrid warfare, the hybrid threats are going there. And those countries are pretty much very well prepared, and they've gone through those tests for a very long time. So the private sector seems to be more resilient at this point just by experiencing it more or thinking about it more.
Bloomberg's Piotr Skolimowski from Latvia. Thank you so much for the reporting there. Now, EU leaders meeting in Copenhagen this week are set to discuss a slate of flagship defense projects, including a European drone wall and an air defense shield. The Commission laid out its proposals in a paper this week, urging the closing of gaps in the continent's defense by 2030. The plans have gained urgency following a wave of incursions into NATO airspace by Russian aircraft. The Wall Street Journal is reporting that Boeing has started working on a next-generation single-aisle aircraft that could eventually replace the 737 MAX. According to the report, the new narrow-body aircraft is in early-stage development, which includes internal design efforts and exploratory talks with engine makers. And Google has agreed to pay $24.5 million to resolve President Trump's claims that being banished from his YouTube channel was illegal censorship. $22 million of the settlements will go towards the construction of a new ballroom in the White House, while the remainder is going to other plaintiffs who joined Trump in the legal action. In 2023, YouTube lifted restrictions it had placed on Trump's account after a 2-year ban triggered by the January 6th riot. And plenty more coming up here on Daybreak Europe. This is Bloomberg.
We're being challenged on both sides of our mandates. So in addition to the inflation side, which has been above target for 4.5 years, and from my forecast, probably won't get back to target for another 1 to 2 years. I think end of 27 is what I have in my forecast for when we'll get back to target.
That was Cleveland Fed President Beth Hammack and other Fed policymakers speaking about the path and the direction of monetary policy, and of course some key data coming up this week. But one of the major events that could happen in the next 24 hours is a potential U.S. shutdown. I thought this chart would be interesting because it just goes to show that in previous episodes of shutdown, there was one during October 2013, you saw a sharper reaction in bonds than you did in stocks. So it showed up in fixed income as opposed to stock price movement. And so far, actually, if you look at the futures this morning, there isn't a lot of movement for U.S. futures as we get closer and closer to this shutdown deadline. But where it could show up is in terms of the data release itself. There could be some delay for some of the U.S. labor market releases that are coming through this week. So watch out for that. But context and history obviously important when we think about the ramifications a shutdown could have on the market. Hits bonds more than stocks. Switching over, the USD still not getting a lot of love. This is a picture of CFTC positioning for pretty much most of this year. You can see you started off the year with interest to buy the USD. That changed after Liberation Day in May, and since then it's been steady decline, people shying away from wanting to hold the greenback. You can see most recently positioning has turned sharply negative as well, in line with some of the price action that we've seen with the USD. It is about 10% weaker for the year. And then switching over, we had some major geopolitical news out of the Middle East last night with the 20-point plan released by the Trump administration. In principle, the Israeli prime minister has signed on to it, waiting to hear back from Hamas. Take a look at the Israeli shekel over the course of the last couple of days, about 7.5% firmer over the year, but keeps strengthening and is actually at the strongest levels versus the USD in the last 3 years, as at least some investors there price in optimism about a potential end to the war. Now, on a programming note, on Wednesday, Bloomberg Television will have live coverage of the Women, Money and Power event in London, convening the most influential female voices in finance from around the world to discuss consequential themes facing the future of business. And I'm very much looking forward to being there myself. That is the reason that I'm in London this week. Thank you so much. But earlier, just to point out that we said Zijin Gold raised $32 billion. We want to clarify they raised $3.2 billion, not 32.